what's up? We are back with another stock review, and today we will be looking at NVIDIA. So normally I kind of stray away from larger companies just because they don't have as much upside, especially for me as a younger, aggressive investor. But I figured just as an update to one of the biggest and hottest companies in the world, I would do it. So it'll probably be a fairly quick video, just going through everything and just giving an analysis. So if you're interested, make sure to subscribe. I make these videos basically every day of the week. And yeah, let's get into NVIDIA. All right, so getting into NVIDIA, I think everybody knows what the company is, so I won't even really get into that. Semiconductors, massive GPUs, computer products, as well as a ton of infrastructure and AI related things like that. Market cap at $3.4 trillion. That is insane. Especially the growth to get to that valuation is just crazy. Target price is at 174. So they actually have a valuation currently of 3.4, but their target is closer to 4 trillion, which is insane. Actually, I think that would be probably 3.8-ish if we had a $174 stock price. So still crazy. Long-term growth rate at 41%, which again is insane. You could just see the massive outperformance compared to the market here. Really nothing to even say about this. They just dominated the entire market for the past 3 years, basically, maybe 2 years. But either way, going into their growth summary, hugely positive numbers across the board. Every single estimate is very positive, including dividends, which is a little surprising. But overall, very, very positive across all metrics, especially short term. They're expecting a ton more growth, which is interesting, but also can they sustain it? And is there even enough money to get them to a higher valuation if they see this kind of growth, which in my opinion, it's going to take a massive amount of investment into this to really drive any kind of stock growth further, but we'll have to wait and see. So saying that, let's get into the financials now and see what we're working with. So first up is income statement, and this is over the past. Let's switch this to 10 years and see what we're dealing with. So first of all, this one is an estimate of the last 12 months. So we're just going to ignore this and focus on this one instead for the fiscal year 2024. And looking into it here, you can see just how enormous their sales growth was. So basically doubling, more than doubling year over year. And that is all in billions as well. So going from 27 billion to 61 billion in 1 year, that kind of growth is so unprecedented that there's just nothing to even really say about it. The biggest thing here, though, is actually their net income growth going from 4 billion to just under 30 billion. That kind of growth was so shocking to see. And even 2023, they had kind of a rough go of it with their profitability, but you could see just how much they've really brought it back just over that 1 year, which is amazing. Another thing, it does look like their total shares are slowly starting to come down over the past 3 years, which is awesome. Great for the company because hopefully they'll be able to really start increasing their own internal value by repurchasing their shares. But overall, I think it is just so expensive for them to repurchase any meaningful amount of shares right now that they probably won't be doing much of it unless they see themselves in a lower valuation kind of situation. Looking at the balance sheet now, cash is sitting at 26 billion. They do have a lot of debt, but it is nothing compared to how much cash they have. And also they have been pretty diligently working over the past 2 years to reduce that, which is awesome. Going from 11.6 to now 9.5. That's a fairly significant reduction, especially considering that they also have a record amount of cash now. So reducing debt while also building up a ton of cash is awesome. And other than that, everything else looks pretty good. Again, very little debt, 1.5 billion short-term, 9.5 billion long-term. That is very, very manageable for the company. And we'll see later in their debt to equity ratio just how manageable it is. It's very, very good numbers across the board here. Cash flows look really solid. And again, with the last 12-month estimates here, the numbers are just insane, to say the least, but we're not going to focus on that right now. We're going to focus on fiscal year 2024 because this is the solid actual numbers we have. And you could just see the massive improvement year over year. So even compared to 2022, where they did their best year previous, they just completely blew them out of the water. Investing activities, you can see they've been purchasing a lot of investments, actually $8.5 billion worth of investments in 2024, which is awesome. Estimated to be even more as well, which is cool. Dividends are fairly consistent. However, I would expect them to start increasing this a lot in the next few years. Mostly, in my opinion, to attract more investors, but also just because they now have so much money that there's really not too much to put it into unless they just want to repurchase their own stock, which again, you can also see they have been doing a lot over the past 2 years. However, once again, at their valuation, putting $9 billion into repurchasing their stock barely does anything. Like, don't get me wrong, it is a great start and it's a very positive thing to see the company doing this. But overall, with $3.4 trillion, that $9 billion is going to do very little, essentially. We can also see a lot of debt reduction here as well, which is cool. And overall, free cash flow, $27 billion in free cash flow. I don't know if that's the highest out of any company ever, but it's the highest I have ever seen by far. So overall, this is awesome. That realistically, that's the only thing I could really say. All of their financials are absolutely excellent, blowing everything out of the water. So that's all we really got here. Now for their ratios. So gross profit is well above the 5-year average. SGA is way below, which is really good. Operating margin, 20% above their 5-year average. Net margin, 18.5% above their 5-year average. So everything by far just beating their own previous numbers by so much. It is insane. 2024 was an amazing year for this company, and the numbers really show that. Going down to the debt to equity, you can see total debt to equity at 25% after being at over 50% a year ago. So not only did they reduce it greatly, but they just are in such a great position to where they can take out more debt if they really wanted to. They could double the amount of debt they have and use that to grow their company. But at this point, they really don't need it because their net income was so high that they can reinvest billions and billions of dollars into the company very easily without taking out debt. So that's fantastic. Numbers here look amazing. And let's see what their last earnings report was like now. So getting into this is for fiscal year 2025. Let's see their most recent, which it looks like their fiscal year is a little bit different than most companies' fiscal years. So we will just go with the most recent one, which was actually about 3 months ago now. So realistically, we should have another one fairly soon. And let me actually check when their next one is, because it should be pretty soon. And yes, it is. Okay, 26th of February is their next one. So will it be a catalyst for the stock? I don't really know, but I'd imagine it will be because there are so many things being expected here. So let's just take a look at what we saw from their last one and kind of see what we're getting into here. So first of all, data center revenue beat, gaming revenue beat, ProViz beat as well, automotive and robotics beat significantly, and then other also beat as well. So across the board, revenue beats. Gross margin beat estimates and matched a year ago, which is perfectly fine because a year ago their revenue was like a third of what it is now. So that's excellent. Operating expenses came in a little bit higher, but again, that is almost meaningless at this point with all their revenue growth. Operating income came above. Operating margin beat estimates as well. Cash from operations came in well above, and free cash flow also came in at a fairly nice beat as well. Let's take a look at what the analysts have to say. I'm honestly going to read through very little here because overall we already see how positive everything is. So if you do want to pause here and read through everything, by all means, go ahead. But I'm really just going to go over the targets. So target remains 180, target raised to 160, target at 175, target at 175, and target at 175. So everything across the board looks very good. Again, they are at 140 right now, and we will get into the chart in a moment, but everything is saying it is going to grow more. And other than this, just beats across the board, basically. So now let's see about a valuation for them. So I don't know exactly what companies they'll be compared to, and it looks like it's just semiconductors in general. So we have Broadcom, Qualcomm, AMD, and they will definitely be on the higher end of these companies. So what we're going to see is definitely an overvalued situation, which in my opinion makes a lot of sense. So we'll go with the current year 37.72 and 35.4. Let's put those in here, and 35.4. And that gives us a valuation currently of not that. What did I do here? Should be seeing something different here. So let me just do that multiplied by that, and there we go. Okay, so that gives us a valuation of $92 a share with a downside potential of negative 33, almost 34%. So I think this does hold up fairly well. Obviously, with the growth they're seeing, they will most likely be able to back up this higher valuation that we see now. And compared to their sector, which honestly, all of these companies are so much smaller, other than maybe Broadcom, which is the second closest to them. That they can't really compare too much. But let's look at named competitors and see what shows up here. And we could possibly get a different one. Okay, so this shows up with a lot larger companies. And if we put these numbers in, 4149 and 3352, we'll definitely see a bit of a different... sorry, I already forgot that one. We should see a bit of a different result. So 33.52. And now we're getting... Come on. Oh, and my thing decided to freeze on me. Okay, there we go. So that gives a slightly better valuation. Honestly, not too much of a difference. Let me just make sure I got all those numbers right. And it looks good. So slightly better if you do named competitors, which includes big names like Microsoft and Amazon. But overall, I would say no matter what, NVIDIA is currently overvalued. I think anybody could say that. A lot of what their growth is currently is based on their growth that will be happening within the next year or 2 years. So it's kind of to be expected. One thing that we could look at now is the chart and just kind of see where they've been moving. So first thing I'm going to point out is they are in a bit of a channel. It's not the cleanest by any means, but it is a channel. And obviously it is an upwards channel. Now, will they see this higher price point get obtained? I don't know. That's right here at the top of their channel is around 165. So will they be able to get that? I honestly don't know. I think the amount of money alone that it would take to get to that number is just insane. That would be basically, if we do the price range to that from here, that is a roughly 18% growth, and that needs basically 500 to 600 billion dollars to be put into the company. Now, this is one thing I always say about arguing against mega cap companies is the amount of money you need to put into them in order to get decent returns is insane. So let's say for 18% for NVIDIA, I think that's around, I already forgot what I said, but I think that's around $600 billion that would need to get put into the company in order to get that kind of growth. And that's just not something that's lying around. Like that kind of money doesn't just appear every other day to get put into companies. So NVIDIA will most likely be able to back up this kind of evaluation, and they most likely will be able to reach this point probably fairly easily, if I had to guess. But overall, it's just an enormous effort and an enormous investment in order to get this. But I could see it happening. I could see it not happening too. Again, like we said with the valuation, NVIDIA does look like, compared to its competitors, it is significantly overvalued with a 32% downside currently. But even still, it'll probably go higher just with NVIDIA being NVIDIA. Either way, that's all I have for you today. Make sure to do your research if you're making any investments. Feel free to subscribe if you haven't. And thanks so much for watching. Hope you enjoyed. See everybody in the next video.